Meet Charles Hoskinson, the founder of the Cardano blockchain platform and co-founder of Ethereum, who steps out to address the current crypto crash. How is the crypto crash unfolding? Any glimpse of hope? Did the effects of the crash pressure Hoskinson to share his opinion? What was his discretion about the crash? Will crypto and especially Cardano recover, and how soon, if at all? Stay tuned to this video to get all the satisfactory answers to these questions. Investors are no longer news that the global crypto market cap has shrunk, with $200 billion in value erased in just 24 hours last Thursday. Bitcoin, which makes up about 44% of the crypto market, dropped to a 90-day low of $26,350. Although the cryptocurrency recovered to about $30,000 on Friday, it was still down 15% for the week and more than 56% from its November high of $69,000, according to CoinMarketCap. This fallout has turned out to be an abysmal experience for cryptocurrencies. Cardano, XRP, and Solana are some of the top 10 tokens that are getting pummeled. A recent report has shown that these three tokens have sunk 11.5%, 9.4%, and 13.4% respectively. The violent swing downward the crypto market has made follows high selling pressure across other risk assets, such as equities. With the correlation between equities and crypto increasing, likely due to a reversion of the same macro forces which took risk assets higher in recent times, a stampede is heading towards the exits now. Cryptocurrencies such as Cardano, XRP, and Solana provide higher risk upside. Well, this is something investors are not looking for right now. In addition to the concern of crypto investors is the recent annihilation of the algorithmic stablecoin ecosystem Terra. Over the past week, Luna, the token on the Terra blockchain, has recently gone from around $80 per token to approximately 1 cent. This is due to a move of the Terra stablecoin, Terra USD, off its peg. Currently, UST is trading below 40 cents per token, which is supposed to be pegged on the $1 level. This has proven to be a massive contagion, as many investors didn't factor it into their valuation models in the crypto world. Although some analysts have told investors to stay the course, others have described the crash as a major milestone or the end of days. A new report by Bank of America says it was the worst implosion since May 2001, and that it measures up with the 2008 financial crisis and the dot-com crash in 2000. Recent happenings not only taught investors to invest carefully, but have busted many myths surrounding the cryptocurrency market. The crypto market crashed and burned this week. The question gaining prominence in the hearts of various investors is, why did this happen? It is safe to conclude that there is no simple answer, although a handful of factors working in tandem may be to blame. Rising inflation, interest rate hikes, and geopolitical instability caused by the Ukraine war could partially share the blame. Bank of America global crypto and digital asset strategist Alkesh reported to Fortune this week. The above factors have successfully created strong headwinds for crypto. In April, consumer prices rose more slowly than the previous month, but were still faster than economists had expected. The Fed hiked interest rates 0.5 percentage point this month, the first in 22 years. And in Ukraine, Russia has shown no evidence of letting up on its invasion. Also, the correlation of crypto to the stock market, which itself has tumbled recently, is another factor. According to the Bank of America analysts, Bitcoin behaves more like a risk asset. Bitcoin is much less related to gold, the most notable store of value, than the S&P 500 and the tech-heavy Nasdaq. Tech stocks started the week poorly, with the Nasdaq closed down 4% on Monday and then another 3% on Wednesday before gaining some ground on Friday afternoon. This week, the Dow fell more than 2% and the S&P 500 tumbled 2.5%, and the Nasdaq 3%. Amid this commotion, 34-year-old Charles Hoskinson, the founder of the Cardano blockchain, has stepped out to address this situation. Don't forget Hoskinson's potential. He is a serial entrepreneur who took an interest in cryptocurrencies during the early days of Bitcoin. Cardano, which Hoskinson refers to as a third-generation blockchain network, results from a proposal by IOHK clients who wanted a Japanese version of Ethereum. Have you seen his most recent video update and Twitter broadcast released last Tuesday? He started by terming the recent happenings as musing events of the market and industry. Stating that the world is operating under an unhealthy economy, he warned of a dystopian future that will be triggered by inflation and the government's incessant action of just printing money. The ongoing crypto crash, where the total market cap has plummeted 19% according to CoinMarketCap, has shined a light on the division between institutional investors and retail investors, the latter of which, in Hoskinson's view, are using crypto to opt out of an unfair global system. Institutions have been dumping their crypto. Most are looking at it as a high-risk, high-reward asset, Hoskinson said. This was always the danger of inviting the Wall Street types in. Due to the financial strategies and rampant inflation, Hoskinson proceeded, they have already chosen their fate. They are playing musical chairs with the global economy, which will collapse. It cannot sustain itself. Cryptocurrencies are not doing the damage. It is the manipulation of cryptocurrencies roiling markets and driving down prices. The whole point of cryptocurrencies, he said, is to restore trust, credibility, and stability into the world money system. Charles Hoskinson explains that large corrections are routine parts of the crypto industry, and that the hysteria surrounding the latest market crash is inflated. Furthermore, Hoskinson says that seasoned investors seem unfazed by the most recent sharp market downturn, as they have witnessed a similar size correction in the past, while newer investors are hitting the panic button. I've been in this space for almost a decade now, and I remember Bitcoin before it was $1, and then going up to $30, then down to $4, then to $250, then to $80, then to $1,200, then down to $250 again, then up to $20,000, then down to $4,000, then $64,000. And no matter where I go and what I do, it always amazes me that there is this constant rhythm of the altitude. So the old guard, nothing phases us anymore. We've seen everything twice to ensure we didn't miss anything. The new people, the minute that something occurs, the new people like the collapse of a stablecoin or the collapse of BitConnect or these types of things, they say, oh my god, this is the end of crypto. Everything is over. We're all going to die. The markets are over. The dream is gone. Hoskinson goes on to welcome newcomers to the latest crypto winter, saying that it could take weeks to months for the industry to find the bottom before steadily climbing up. For Hoskinson, the recent Terra USD and Luna crash could be a blessing in disguise. Reports have proven that he was able to return the favor for an earlier tweet made between the developer of the two currencies, Do Kwon. Just over a month ago, Do Kwon asked if he should buy some ADA to take advantage of the negative correlation, indicating that Cardano's share price was falling while Luna's value was rising. Now that Luna has lost 95% of its value in a week, and there is no longer question of a dollar peg of the Terra USD stablecoin, Hoskinson reacted promptly. Now it was his turn to ask whether it was worth buying some Luna because of the negative correlation. Is there a chance that Hoskinson's Cardano will be the first to bounce back? Will Hoskinson's Cardano provide a more balanced and sustainable ecosystem for cryptocurrencies? Well, according to his website, ADA is the only coin with a scientific philosophy and research-driven approach. In practical terms, this implies that its open source blockchain undergoes a rigorous review process by scientists and programmers in academia. ADA calls itself the first third-generation cryptocurrency and aims to tackle scaling and infrastructure problems that first cropped up in Bitcoin. The first-generation crypto that introduced the idea of digital coins, and Ethereum, the second-generation crypto that expanded use cases for coins to smart contracts. Specifically, Cardano aims to solve scalability, interoperability, and sustainability problems in all cryptocurrency platforms. Also, it seeks to enable cross-chain transfers through sidechains, which conduct transactions between two parties off the chain. It's also exploring ways for institutions and individuals to selectively divulge metadata related to transactions and identities to enable the use of cryptocurrencies for trading and daily transactions. Regardless of these interesting attributes, it is ideal to conclude that Cardano does not stand a chance to compete with other cryptocurrencies, at least for now, as it is bound by several limitations. So, will crypto recover? The news has raised the question about whether the market has reached an expected cool-off period. The price of Bitcoin could still fall due to the UST situation and worsening technical sentiment. Still, if the US inflation continues to slow down, the macro environment will likely improve, and thus the price will bottom out. So currently, the future seems to be unclear. But can we hold on to Hoskinson's assurance that there will be a recovery soon? Let us know your thoughts in the comments section below, and make sure you click the subscribe and bell buttons.